Okay, Lamai, very good morning to you all. We'll start our session. Today we are going to discuss loan amortization schedule, or how to prepare loan amortization schedule or loan repayment schedule. Right, I think you can see the PPT. Right. So loan amortization schedule or loan repayment schedule is a very important part for you, as you all are finance guys, right? People who are going to specialize in the field of accounting and finance. You must know what is loan repayment schedule or loan amortization schedule, right? I'm sure you have already studied or discussed the concept of loan repayment schedule and its importance for your organization or for you as managers making regarding decisions on finance matters, right? Especially loan amortization schedule is required. For example, when a company has borrowed a loan from a bank, and when a company is going to keep paying that loan by installment, at the end of the reporting period, company is required to identify what is the total interest payment made during the period that should be recognized as finance cost. At the same time, at the reporting date or at the end of the reporting period, there's a remaining loan balance. And you know, when it comes to report the loan outstanding amount in the statement of financial position, loan is considered as a liability, and liability should be classified as current and non-current liabilities. So accordingly, if you have borrowed a long-term loan, or let's say finance lease, or whatever the lease, you need to recognize what is the remaining lease balance, and how much should be recognized as a current liability, how much should be recognized as a non-current liability. So all these tasks can be easily be done with loan amortization schedule, right? So accordingly, we will see how to prepare loan amortization schedule. First, by using your existing knowledge, right? Actually, here on Excel, we are going to discuss how to prepare loan amortization schedule by using these inbuilt Excel functions or Excel formulas. There are some inbuilt Excel functions, Excel formulas. You can use them to prepare this when preparing this loan amortization schedule. But I would like to move on to this particular concept from known to unknown. That means we'll discuss, we'll see how to prepare this loan amortization schedule with Excels with the existing knowledge, because you have prepared manually this repayment schedule for your advanced level, or maybe for sure for your financial management, for your corporate finance subject. You may have already prepared this important schedule, right? So accordingly, we'll see how to prepare loan repayment schedule with your existing knowledge. The way we prepare, let's see, how do we prepare this loan repayment schedule manually, right? So accordingly, let's assume we have basic input data regarding a loan repayment scenario. Let's say these are your input data, right? It's the input data, and here you have the loan amount, payment and loan borrowed, or lease or principal, whatever, right? Let's say loan amount. Let's say we have 1 million loan. And let's say then we have interest rate. We have negotiated with the bank. Interest rate is nowadays interest rate is very high. Let's say it is 24%. It's a very high rate these days, right? 24%. Then we'll take the repayment period, right? Loan period or whatever, right? Repayment period, let's say 5 years. 5 years. Let's assume for the time being this enough, and let's now see how to recognize the loan installment. Loan, we are required to find out this information and our output. And our output, we want to first recognize, let's say, annual loan installment. Annual loan installment. Right. Let's assume a loan is going to be repaid, right, annually. Usually, right, loans are repaid monthly basis at the end of each month. I think most of your families, your parents may have borrowed loans for different purposes, and you have experience they are paying their loan monthly basis. Anyway, right, as a starting point, let's assume right, there's a particular loan arrangement, right, where the company and bank they have negotiated to settle the loan by way of making annual installment. Right. Okay. Now, using your finance knowledge or financial management knowledge, can anyone tell me how do we usually compute the loan installment? How do we compute loan installment? Can anyone tell me? You all are accounting and finance people, you must know. Hansika, any idea how do you compute the loan installment? Hansika or Nusrat? Any idea? Loan installment is a very simple concept, right? It's basically time value of money. Hansika, no idea. Idea then Nusrat, definitely you have already studied, right? I think you have studied time value of money. I usually advise, right, usually advise to accounting and finance people, if you are going to be experts in finance, keep in your mind, you must be expert in time value of money. No excuse, right? If you are not an expert in time value of money, that means you are not a finance student. You must be an expert in time value of money, right? Present value, future value, present value of an even cash flow, uneven cash flow, annuity, due annuity, right? There are different types of cash flows and perpetuity, and you must know how to compute the future values, present value, right? How to compute the present value of an ordinary annuity due, how to compute the future value of an ordinary annuity, how to compute the future value of a due annuity. So what is the difference between ordinary annuity and due annuity? And there are some concepts called deferred annuity. Okay, so you must know how to compute the present value, right? Just for, right, actually I'm not going to discuss about finance concept because we are interest payment, interest plus loan repayment portion, no, right? It's correct, right? As a formula that is correct, but how you compute, right? How you compute your loan installment for your finance or financial management subjects. Okay, anyway, let's do refresh your knowledge, right? Let's identify there are different cash flows. Let's say year 0, year 1, year 2, year 3, year 4, right? Uh, right, Lamai. Okay, so this is our year. This is not about Excel or accounting modeling, right? Just to refresh your knowledge, I'll take about 5 minutes just to give you some insight about what I'm telling and why I'm saying that finance, the people must be an expert. There are no excuses. You must be an expert in present value, future value, computation of any types of cash flows. You can't, that means you are very weak in finance. My finance time value of money. Because finance people are right, their main concern, financial management, corporate finance, your main concern is to maximize the shareholders' wealth or maximize the firm value. So what is meant by value? Value is the present value of future cash flows. So that is the prime objective of finance. Prime objective of finance is to maximize the shareholders' value, maximize the business value. Business value the present value of future expected cash flows of the business. Right? So accordingly, crucial or central objective of finance is maximize firm value, shareholder wealth or shareholder value, and the shareholder value means the present value of future expected cash flows, and present value is all about the time value of money. So accordingly, think about the dividend policy, think about the cost of capital, think about the investment appraisal, all everywhere, right? We use time value of money. Okay, so keep in right. So you need to separately study, right? Independently study time value computation techniques. I'm going to teach about this, but anyway, just to refresh your knowledge, let's assume this year and right, let's say we have 1,500 and 2,500 and let's say 1,888. So let's say 3,000. So this is a cash flow. This is a cash flow. This cash flow is an uneven cash flow. You know, this cash flow is an uneven cash flow. So you should know how to get the present value of this cash flow. You know, right? If you want to get the present value of this cash flow, so you need to multiply this by present value interest back annuity, and present value interest back annuity is equal, you know, 1 divided by 1 plus r. Let's say we put r somewhere here, r to the power here, this, right? So accordingly, I will take r, will make it constant because we are dragging it to right side. Make it constant by pressing it 4. Okay, and we'll put our interest rate is, let's say 10%. That's familiar for you. Okay, right. So if you want to get the percentage of this cash flow, you know, this is your percentage interest factor, and increase the decimals from like this. So I think these percentage factors may be familiar for you. 909826751. That means these are correct. You are not supposed to memorize these things, right? Okay. Then this is the percentage. This is the percentage. This is the percentage. Percentage is equal cash flow times interest factor, that you know, right? So according you can easily drag here like this. Equal this, this cash flow multiplied by the interest factor. Right, now you can drag this to this area, right? Okay, and if you want to get the total present value, right, you can get the sum here, right? Okay, this is all you know, right? So this cash flow is called my uneven cash flow. This is an uneven cash flow. Uneven cash flow, right? Okay. And we'll take the sum like this. Okay, this sum of the uneven cash flow. Okay, let's now consider another cash flow. What if it is like 1,500 each? What is this, Laman? Now, do you have the single term for this cash flow? What is this? What is this cash flow? Is it an uneven cash flow? No, this is an even cash flow, but there's a technical term for this. Can anyone tell me? Very good. This is an annuity. Annuity is a series of cash flows, series of constant, continuous cash flows occurred for a definite period. So this is an annuity because even cash flow, uninterrupted, interrupted periodically even cash flows uninterrupted, and it occurred for a definite period from year 1 to end of year 1 to end of year 4. Right? If this goes for an indefinite period, infinity, if it goes for an infinity like this, then what is it? Then what is this cash flow? Very good. Now your answers are correct. Perpetuity, very good, that you all know, and you must know how to get the present value of perpetuity. That you know is simply dividing it by R, right? Just one cash flow divided by R. Accordingly, if the 10%, this should be 15,000. We can 1,500 gane අනන්තයේත් ලැබුණොත් අවුරුද්ද අවසානයේ මේ අනන්තයේත් ලැබුණොත් ඒ 1,500 වල ඒ cash flows වල present value එක 15,000. හරි කොච්චර අනන්තයේත් ලැබුණත් present value එක 15,000. The reason the present value of the future cash flows, when it gets laden, the impact on the present value is very low. අනාගතයේ අන්ත යන්න කොච්චර ලැබුණත් ඒ වගේ present value එකට එන impact එක ඉතාමත් අඩු වෙනවා. Ultimately it goes to maximum 15,000. Okay, so that you know. Then what about this cash? This is an annuity, correct? Infinity එකත් හරි. Right. How do you compute the present value of this cash flow? Annuity. Annuity ke present value කොහොමද හොයන්නේ? You can do it two different ways, right? You can take this as a single cash flow. You single cash flow එකක් ගන්න පුළුවන්. Then add the present value separately. This is the present value. Or else you can get the present value in one shot. How? Take the present value of an annuity equal annuity multiplied by present value interest factor annuity. Annuity means how? Annuity is how much? 1,500. Annuity is how much? 1,500. Present value interest factor annuity, you can read it by right from the table. Finance table again. Present value interest factor annuity read and you can take it here. Or else you can get the present value interest factor annuity formula. What is the present PIFA formula? Can anyone tell me what is the formula for interest factor annuity? Right? 1 minus 1 over 1 plus R to the power n divided by R. 1 minus 1 over 1 plus R to the power n whole divided by R. 1 minus 1 over 1 plus R 1 plus R to the power n. We'll put n somewhere here. N the whole should be divided by again R. Right, we'll put number of years here 4. You can see same answer, right? So if there's an annuity, there's an annuity, you can take annuity formula, or you can read the table and take these figures, right? Okay. Right, that's it, right? Okay. Then what is this? What is this? What is this cash flow? Can anyone tell me? This cash flow, again an annuity. This annuity is called deferred annuity. Make a defer certain period. This is also an annuity. This is also an annuity. 15,000 gaane, 5,500 gaane, constant cash flow continuously for definite period. Just for 3 years. This is also an annuity, but what is it? Deferred annuity. Avrudu dekak defer vela thiyena. Okay. So there are different cash flows, right? And you must know how to get the present value. And what is this? Is this an annuity? Yes, this is an annuity. This is called ordinary annuity or due annuity. This is called due annuity or annuity due. If the cash flow occurs at the beginning, it is called due annuity. එතන හැම විටම මතක් තියාගන්නමයි due annuity එකේ future value එක due annuity එකක future value එක ඔයාලගේ මම අර කිව්වේ time value expert වෙන්නේ due annuity එකක future value එක හැම විටම deferred annuity එකේ future value එකට වඩා වැඩි. දැන් මේ තියෙන්නේ right මේ තියෙන්නේ දැන් හැම විටම due annuity වුණොත් annuity එක future value එක හැම විටම ඒ annuity එකේම deferred annuity වඩා වැඩි. කොච්චර ප්‍රමාණයකින්ද 1 r ප්‍රමාණයකින් වැඩි. මම පෙන්නන්න මෙතන අරගෙන. දැන් මේ cash flow එකේ අගයට වඩා 1 r ප්‍රමාණයකින් වැඩි වෙනවා. එහෙනම් වැඩි කිරීම මම දානවා 1 r. මේ තියෙන අපේ r දැන් සමානයි. ඒතර ඒ වල දැනගන්න. මොකද්ද due annuity එකේ ordinary annuity එකේ වෙනස? ordinary කියලා කියන්නේ cash flow occur වෙන්නේ at the end of the period. මේ තියෙන්නේ ordinary මොකද? future එක. මේ ordinary මොකද? මේ due මොකද? right දැන් හදලා බලමු. මෙන්න ordinary annuity එක අවුරුදු 4ක් සිද්ධ වෙනවා. end of year 4. දැන් බලන්න ordinary annuity එකේ normal method එකට future එක කීයද? මෙච්චරයි. using our annuity factor formula same answer. එතකොට ordinary වුණොත් future එක කීයද? Same for cash flows occurred at the end of the period for 4 years 4,755. මේක due වුණොත් මොකද වෙන්නේ? Same cash flow due වුණොත් due වෙනවා කියලා කියන්නේ 4 year cash flow එකක් සිද්ධ වෙනවා from the beginning. ඒ කියන්නේ අග වෙන්නේ නැහැ. From the beginning එනවා. දැන් බලන්න 4,755 මොකද වෙන්නේ කියලා. මොකද වැඩි වුණා. ඒතර ළමයි මතක් තියෙන finance functions finance table හදලා තින්නේ ordinary එකට. ordinary කියන්නේ සාමාන්‍ය. ඒ සාමාන්‍ය අපි finance එක assume කරනවා cash flows occur at the end of each period. So the tables are developed for ordinary annuities. present value නම් ordinary annuities වල present value tables තමයි finance වල තියෙන්නේ. tables වල තියෙන්නේ. future value නම් ordinary annuities වල future value. එතකොට අපිට due annuity එකක් ආවොත් මේ වගේ මේක due annuity එකක් using finance table you can't directly take this answer. Why? Finance tables provide you assume the cash flows are ordinary. So දැන් මේක බලලා කොහොමද බලන්නේ? ඒත් පුළුවන් finance table එක බලන්න. finance table එකකින් එන්නේ මේ උත්තරේ. මොකද number of payments for number of years for finance table එකකින් මෙච්චරයි. හැබැයි පේනවා ඒක නෙවෙයි මේක 100% sure calculation එක නෙවෙයි. Assuming cash flows separately, this is the present value. So this is 100% sure. So according to our tables, according to our formulas, it is this. So according to how we can convert this to the correct answer. I told you, always keep in mind the present value of due annuity always greater than present value of ordinary annuity. By how much? By 1 r times greater than ordinary annuity. එහෙනම් අපි මොකද කරන්නේ? ටේබල් එකෙන් මම එක හොයා ගන්නවා. අපි දැනගන්න ඕන due annuity එකක් නම් එය ordinary annuity එක වගේ 1 r times greater than. ඒ නිසා ordinary annuity එකෙන් ගත්ත සංඛ්‍යා figure එක මේක ටේබල් එකෙන් අරගෙන වාර්තා ඉලක්ක මේක වැඩි කරන්න එක ධන ආරෝප. right ඒක අනවශ්‍යම කියලා දෙන අවශ්‍ය නැහැ. right අපි finance right ඒතකොට පැහැදිලි මේ උත්තරේ ගන්න පුළුවන්. ඒතරත් මම පැහැදිලි කරා. right ඒ වගේ දේවල් දැනගන්න ඕනේ. අනිත් දේ තමයි future values වලට යද්දී. මේකේ future values වලට යද්දී. future values වලට යද්දී මේකත් එකෙන් ordinary annuity එකක්. ඒකේ future value හොයන්න පුළුවන්. හරි. ඒ වගේම ඒකට වෙනම ෆෝමියුලා එකක් තියෙනවා. ඊට පස්සේ ඒ වගේම මතක තියාගන්න ළමයි ordinary annuity future value එකයි due annuity එකේ future value එකයි වෙනස්. මෙන්න ordinary annuity එකක්. අවුරුදු 4ක ordinary annuity එකක්. මේකේ future value එකයි මේක due වුණා නම් මෙයා මුලින් ඉඳන් සිද්ධ වුණා නම් මේකේ future value එකයි වෙනස්. ඔයාලගේ finance table වල දෙන්නේ මොන annuity එකටද? ordinary annuity future value එකට. ඒතර කොහොමද මේ tables follow කරලා how do we find out the future value of an ordinary annuity? By reading so how to compute the future value of a due annuity by using the ordinary finance table. එතකොටත් තියෙන relationship එකක් තමයි. Again future value ගත්තත් the future value of an due annuity again greater than future value of an ordinary annuity. present value ගත්තත් future value ගත්තත් හැම විටම due value එක වැඩි. හරි? ඒ නිසා කොයිතරම් ප්‍රමාණයකින්ද again by 1 plus r times වලින් වැඩි. ඒවා ඔයාලා දැනගන්න right. මට අවශ්‍ය මේවා නෙමෙයි. එතකොට මේ මෙයා අපි උගන්වන්න අද බලාපොරොත්තු වෙන මොඩලින් වලට හරි because for accounting modeling you are supposed to have preliminary or the prerequisites that is the knowledge about accounting fundamentals, finance fundamentals, right? Okay. Anyway, then අපි බලමු අපි කතා කරන්නේ loan එකක් ගැන. right? loan එකක් ගැන. දැන් loan එකක් ගන්න කවද්ද? ළමයි loan එකක් ගන්න හැම විටම present එකේ. අපි loan ගන්න නැහැ. අපි අනාගතේ නෙවෙයි loan ගන්න. loan scenario එක ඇති වෙන්නේ loan agreement එක sign කරලා ගත්ත මොහොතේ ඉඳන්. So loan let's consider loan or the borrowing of loan, right, as a scenario. So usually loan is borrowed today, or the loan scenario start from today. Today you sign the agreement and today you borrow the loan. So accordingly, let's assume we borrowed 1 million today. So this is our amount you borrowed today. So this is what we are going to repay in the future in equal installment. So today you borrowed 1 million and we are going to repay in future in equal installment. Let's say in 5 years now. 5 years now. So today you borrow this amount and in 5 years we are going to repay. Let's assume we are going to repay loan end of each year. So usually that happens in lamai ordinary annuity එකකට ideal example එක තමයි loan repayment. ඒ loan එක ගන්නේ අද ගත්ත ගම loan repay කරන්නේ loan you borrow today and it is going to be repaid at the end of each month or at the end of each quarter or at the end of each year. So loan repayment scenario is an ideal example for ordinary annuity. Because loan is repaid in equal installment, right? So this is a cash inflow you as the borrower, and in return you will have to keep paying a particular constant amount during the agreed loan period. This is an example for loan repayment. So ළමයි අනෙක් පැත්තේ මතක තියාගන්න loan එක කියලා කියන්නේ එතන මොකක්ද? අපි right loan එක කියලා කියන්නේ හැම විටම ඔයාලා ගෙවන installment වල present value. right loan එකක් කියන්නේ අනාගතයේ ගෙවන installment වල present value. හරි? එතකොට අනෙක් පැත්තෙන් installment එක කියලා කියන්නේ ගත්ත loan එක equal amount එකකින් settle වීම උදෙසා කළ යුතු ගෙවීම. Loan means the present value of future installment. Yes, that's perfectly correct. Right? What you borrow equals the present value of your repayments. On the other hand, if you have borrowed, installment means your annuity amount, your annuity. So accordingly, if you know how to get the present value of this, then make a present value. Make a present value නම් present value formula එක දාන්නවා නම් දැන් මම present value formula එක ලියවා කරින්නේ present value formula එක සමානයි annuity කියන්නේ annual payment එක multiplied by 1 minus 1 over 1 plus R uh, 1 times 1, so okay, caps of the 1 minus 1 divided by 1 plus R to the power n. මේ whole set එකම divide කරන්න ඕන R වලින්. ඒ සූත්‍ර විවිධ හැඩයකින් තියෙන පුළුවන්. හරි විවිධ symbols වලින් තියෙන පුළුවන්. දිවිදි okay දිවිදි මම formula හැටියට නොවන හැටි ලියන්න right. Is the formula right. So accordingly the කලින් example එක මම පෙන්නුවා. Annual cash flow එක වැඩි කරන්න තව ක්‍රමයක්. Present value කොන සූත්‍රය මත present value equals annuity එක annual cash flow එකක් multiplied by present value interest factor of an annuity by reading the table. මේකෙමුත් පුළුවන්. මේ formula එකකුත් පුළුවන්. තවත් ක්‍රම තියෙනවා. right okay. එතකොට අනෙක් පැත්තෙන් දැන් මම ඔයාලට කියනවා loan එකක් කියලා කියන්නේ loan means right your loan value exactly equal to the present value of your future loan installment. Future of your loan installment. So accordingly, if you know the loan, if you know the loan amount, that is the present value, and if you know the present value interest factor, එතකොට මෙයා උත්ත කරලා A හොයා ගන්න පුළුවන්. එතකොට අපි A කියන මොකක්ද? A අපිට A කියන්නේ A equals value මෙමවන්න පුළුවන් right. දැන් මේ සූත්‍රය දන්නවා. අපිට හොයාගන්න අවශ්‍ය නම් කිසියම් සිනාරියෝ එක මේ annual installment එක. එහෙනම් A equal මොකද්ද? පහවසර ගණිතේ A equal what? A equal present value එක divide කරන්න PVIFA. එහෙම නැත්නම් අර කියන සූත්‍රය. මේ කියන සූත්‍රය ඉතුරු කැලෙන් බෙදන්න. ඒ දේ තමයි අපි දැන් කරන්න යන්නේ. මෙන්න annuity හොයන සූත්‍රය. එහෙමනේ. එහෙම නැත්නම් A equal present value divided by what? Present value interest factor annuity table එක තියෙනවා. මේකේ annuity එක හම්බ වෙනවා. ඉතින් present value interest factor හොයාගන්න අපිට අවශ්‍ය වෙන්නේ මේ variables දෙකයි R එකයි N එකයි. If you know the interest rate and if you know the number of payments of the period, then you can refer this to the table and you can find out PVIFA. And the loan amount borrowed you are given now, you can find out A. Okay. එහෙනම් අපි බලමු ඒක තමයි කියලා දෙන්න ආවේ මේ වටින් ගොඩින් සියල්ල කියන්නේ. මේවා අපිට අවශ්‍ය නැහැ. ඒක අවශ්‍ය නැත්තේ නෑ. ඒක මට අවශ්‍ය නැහැ. ඔයාලගේ ෆයිනෑන්ස් වල කතාව. හරි. දැන් අපි බලමු එයාලම annual loan installment එක කොහොමද ගන්න. right. දැන් මම කියනවා loan amount එක දීලා තියෙනවා. Loan amount is given. Interest rate is given. Loan repayment period is given. Right. And now you are asked to compute the loan installment. And I told you there's a relationship between the loan installment and the loan amount. Why? Loan amount means the present value of the loan installment. Present value of the future loan installments. එතකොට මේ formula එක මම ගන්නවා. A කියලා කියන්නේ මොකද්ද? Loan installment එක. V කියන්නේ present value, that means loan. And for you to compute annuity, you need to know principal of the loan amount borrowed and PVIFA. PVIFA depends on interest rate and period. So you can compute the loan installment. අපි දැන් ඔය loan installment එක යනවා. අපි PVIFA හොයාගමු අමාරු එක. මොකද්ද? present value interest factor annuity කොහොමද හොයන්නේ? present value interest factor annuity හොයාගන්න සූත්‍රය තමයි 1 minus 1 divided by 1 plus R අපිට මෙතන ඉන්නවා interest rate. මේ දවස් interest rate is very high. to the power අපේ loan period එක අපි එකත් fix කරලා දාමු. මේ සම්පූර්ණ set එක බෙදන්න ඕන R වලින්. ඒක formula එකේ ස්වභාවය හරි R වලින්. R අපි දෙන්න ඕන කොහෙන්ද? reference මෙතන. right දැන් එන්න කරමු. මේ තමයි annuity factor, present value interest factor of an annuity at a rate of 24% and 5 years table එකක තියෙන කට්ටිය කියවලා බලන්න. right, so this is the correct answer. හරි. then annuity factor තියෙන අපිට අවශ්‍ය annual installment නේ. loan installment එක equal present value divided by this. present value කියලා කියන්නේ අපි දානවා loan එකේ amount එක. present value is the present amount you borrowed, loan you borrowed. ඉතින් අපි මේ form එකකට දාමු පොඩි මේ සම්පූර්ණ cover කරලා දාමු. right, සම්පූර්ණ cover කරලා තියෙන්නේ ඒක වෙනම set එකක්. අපි දැන් loan එක බෙදීම ලකුණු දානවා. මේ කියන PVI එකෙන් දැන් එන්න කරමු බලන්න. right, මෙන්න ළමයි අපේ loan installment එක මම decimals අඩු කරනවා. ඒ decimals අවශ්‍ය නැහැ. ඒ කියන්නේ if you borrow 1 million at a rate of 24% to be paid or settled by way of paying annual installment, your annual loan installment would be 364,248. So accordingly, this is your calculation. Accordingly, then it passe. So we develop a simple model. Now, if you want to borrow 800,000, quickly it will tell you what is the loan installment. This is the loan installment. If you are going to take 5 million, this is your loan installment, right? Right. So we'll see how to prepare our loan repayment schedule. Loan repayment schedule. Right. So what is the format of the loan repayment schedule, Laman? Can anyone tell me loan repayment schedule के format එක? First අපි දාමු නම් okay අපි normal format එකක් ගමු. Open loan balance. මම කෙටියෙන් දානවා open loan balance. ඒක තමයි open outstanding balance. So loan outstanding whatever the wordings you can apply, right? So I'm not that concerned about the wordings that I apply here. You may apply whatever the convenient or the comfortable term that fit for your organizational application, right? So I put just open loan balance. So loan outstanding at the beginning of the period. Okay, then interest for the period. Then installment. Then capital repayment. Capital payment. That means loan repayment. Capital payment. Principal payment. Finally, closing balance. Closing balance, right? Okay. At the beginning, we will put here the year. I said year 1. Year 2, year 3, year 4. I'm just type karna, right? So now first at the beginning of the year you have a loan balance of this. Let's say constant. This is your open beginning loan balance. Then interest, right? You are going to make the first payment end of the year. The loan is at January 1. You are going to repay the loan in 31st December. That means the full loan balance is subject to annual interest. සම්පූර්ණ loan එක outstanding තිබුණ අවුරුද්දක් ඒකට interest rate එක අපි charge කරනවා. කොහොමද charge කරන interest? Outstanding open balance multiplied by the interest rate at a rate of 24% is very high these days, right? So okay, this is your interest. 1.2 million interest payment. Then installment amount is here. Installment amount is here, right? So you make it constant again by pressing F4. Then capital repayment, capital payment. Then carefully look at here. So what is the loan installment you pay? You borrowed 5 million and end of the year you paid 1.8 million something. So accordingly, don't think your entire loan balance will be reduced or will be reduced by the whole loan installment. Why? Even if you pay 1,821,239, they will charge this much. That means 1.2 million for interest. So you are paying. Keep in mind your loan installment consists two components. Loan installments always consists of two components. One is the interest charge for the period. The other one is the capital payment or loan repayment. So accordingly, even if you pay 1,821,239, out of which 1,200,000 they will charge as interest cost or interest income for them, their point of view. So capital repayments means the difference between these two. This loan installment they can recover this much of interest. So loan will only be deducted by 621,238. Decimals, the others are decimals, right? Right. So accordingly, end of the period, your closing loan balance will be how much? Open loan balance was this much, from which you only paid 621,239 because of the loan interest charge. They charge interest from your installment. So closing balances will be this much. Right. Then this is your closing loan balance. This closing loan balance will be the open loan balance for the next period. So you can take it from this place. Then interest payment calculation, you can drag the same formula. Installment always constant, you can take it here. Installment always same, annual installment constant. And capital repayments, you can drag it here. Like closing loan balance also you can drag it here. And this so you can see end of the period loan balance is 0. Loan balance is 0. So this is how you prepare your loan amortization schedule manually. Here the support of Excel spreadsheet, just simple calculations functions without using inbuilt finance formulas. Okay, this is how you prepare your loan amortization schedule. So what is the importance of this, preparing this? Now you know this amount. So I'm not going to talk about the double entry, right? Double entry, this 5 million, what is the double entry? This 5 million bank account credit, loan account එකට මේ amount එක ඒවා උගන්නන්න අවශ්‍ය දේවල් නෙවෙයි, right? මම අර support එකක් වෙයි කියලා. Okay, this is your loan account. So when you borrow, your current account debit, loan account credit, account or cash account debit now make it a following and not here the 5 million debit credit also liability. All right. Then when you repay the installment, so what is double entry? So these are transactions, right? This is a transaction. You borrow 5 million, bank debit, loan account credit, and these are the transaction. Installment you pay. When you pay the installment, what happens? When you pay the installment, you pay cash, so bank balance reduce, so cash credit or current account credit, loan repayment account debit. Bank account or cash debit minimum amount installment. May first year double entry, right? I'm not supposed to talk about this double entry. I'm not supposed to discuss the accounting entries. Anyway, just for your knowledge. Then what happens? May first year pen then you need to recognize what is your interest expense. Interest expense are interest payment. Maybe annual interest expenses that you are supposed to charge to a PN. Make a charge to a PN. Make a appear in a financial position, the statement of financial position. Right? It's the main amount of interest. And I'm going to payment taking up a charge to interest expense account. Interest expense account, debit, loan account credit, this much. එතකොට loan account එක balance කරපුවාම අපිට ලැබෙනවා then you have the remaining loan balance that is exactly equal to your repayment amortization schedule, the balance, right? Here the balance is equal the total minus this, that is exactly equal to our balance we took from our amortization table. You can see this correct, this exactly the same, right? Okay, this is the accounting side, right? Now the problem, you have loan balance, right? Balance carried down this much. This is a liability. So this should be appeared in a statement of financial position, right? And a statement of financial position as at the reporting date. In the statement of financial position, this is a liability, so it should appear under equity. Under equity, I mean it's under current liability or non-current liability. You know that this is a long-term liability. Long-term liabilities have two components of current and non-current. It is a must make a lakunak anivarma hamme one exam එක long-term liability should be classified as current and non-current. So you need to identify what is your non-current liability portion, under which you can say loan from ABC. Then under current liabilities, then loan from ABC. Sometimes you can say current portion of the non-current liability, whatever, right? So now you need to classify. You can't put this here. You can put balance sheet will be tallied. Still, it is not in line with the accounting standard. Why? Accounting standards require you to standards require you to classify the liabilities as current and non-current if it is relevant, right? So if you put it like this, you will lose 1 mark or 2 marks, right? Okay, this should be classified as non-current or current. How can it be done? It's very easy if you prepare the loan amortization schedule. This is the balance as at the end of the period. My non-current liability means out of this liability, how much you are liable to be settled next year. So May liability next year settle when the main repayment. එතකොට මතක තියාගන්න මේක තමයි closing liability එක. ඒ closing liability එකේ current portion එක තමයි මේ next month එකේ capital repayment එකෙන් වෙන්නේ. Next month එකේ capital repayment එකෙන් වෙන්නේ current liability portion. ඉතිරි ටික මෙතන තියෙනවා. ඒක තමයි ඉදිරි වර්ෂවලදී pay වෙන්නේ. ඒක අපේ non current portion එක. හරි. එහෙනම් මෙන්න මේ liability එක balance එක අපි classify කරගන්න පුළුවන්. Loan non current liability means අර balance එකේ යට තියෙන amount එක current liability කියලා කියන්නේ next period එකේ installment වලින් settle වෙන capital repayment. Settle වීමට නියමිත capital repayment. Right, that's all. And if you want, you can get the it's very clear. The sum is equal to your total liability. This is the sum that is exactly equal to your total liability. Right, that's it. So this is the advantage of your prepare annual loan repayment, and you can have an idea what is the total interest payment, right, for the loan. By the end of the loan repayment, you have paid approximately 4.1 million. For the loan of 5 million, you have paid 4 million loan, 4 million interest just in 5 years. The loan can approximately double with the right. Okay, this is how you prepare your loan repayment schedule using your ordering approach. Then may schedule එක ඉතින් ඔයාලා අන්තට හදන්න පුළුවන් වෙනවා, right? ඒ කියන්නේ again finance people must be expert in finance. Time value of money, complete time value of money must be a part of their life. You must be an expert in time value of money. And at the same time, you must now know how to prepare this kind of loan repayment schedule. Is very simple and interesting, right? Not a big thing, right? On accounting පැත්තත් කියලා දුන්නා. Alternative double entry තියෙන පුළුවන්. නමුත් මම හිතනවා මම කියලා දුන්න double entry එකේ ගැටලුවක් නැහැ. ඔයාලට පැහැදිලිව තේරුම් ගන්න පුළුවන් කියන එක. හරි. දැන් ප්‍රශ්නේ මේ විදිහේ loan දෙන්නේ නැහැ ඔයාලගේ අම්මලාට තාත්තලා බැංකුව, right? I'm sure many of your parents have borrowed loans, right? Otherwise these days the people who have already borrowed for about 1 month ago, they are lucky winners, right? Because I borrowed a huge loan at a rate of 9%. Now the same loan is more than 20%, 22 or 23% loan interest. I borrowed my loan at a rate of 8.5, in between 8.5 and 9%. And I borrowed it on fixed rate. Lamai wala ignorant corporate finance, there's a concept called term interest of structure of interest rate. Term structure of interest rate. So samani interest rates unexpectedly, if the interest have come down, you better go for a fixed rate borrowing. If the interest rate is too low, you should go for fixed rate borrowings. If the interest rates are very high, seems to be very high, then you better go for variable rates. So term structure of interest rate pennanne investors lage right concern about the behavior of the future interest rate. එතකොට interest rate historically low rate වලට ඇවිල්ලා තියෙන පහුගිය කාලේ ඒ වගේ වෙලාවක අපි ගන්න ඕනේ borrowings කරන්න ඕනේ fixed rates. දැන් මම බැරි වෙලාවට variable rates අරන් තිබ්බනම් මගේ installment එක 50% වලින් විතර වැඩි වෙනවා තව ඉදිරියේදී, because banks will regularly revise their installments to match the current interest rate. But if you have borrowed on fixed rates, it is not possible for the bank to change your installment. Hari, මෙතන පෙන්වන්නේ වෙනම දෙයක්, right? Accordingly, you can use this formula to compute the installment rate. So installment value, where you are going to, if you are going to pay the installment on monthly basis. This is the formula for annual loan installment. So you can see the period years in 5 years it became 0. Now, if you are going to settle this loan in monthly installments, how you do? Monthly installment යනවා නම් කොහොමද අපි monthly installment එක කරන්නේ? ළමයි monthly installment එක යද්දි same formula මේවත් ඔයාලා දැනගන්න ඕන finance limit formulas annual formula එකේ monthly යනවා නම් මේ formula එකේ right, if you are going to revise this formula to accommodate monthly installment, it is very simple. This all what we have to do, divide R by 12 and multiply by 12. Monthly now, right? Okay. So according to my, this is the original formula. This is the formula we developed here. Look at this address bar. This is the formula we developed for installment calculation. This formula here we have R and N. Right? If you want to convert this into monthly scenario, each and every R available in this formula must be multiplied by, so must be divided by 12, and each and every N, if any in this formula, there's one N, right? It should be multiplied by 12. So what we have to do, this is an R. Make a R. So what I'm going to do, I divide this R by 12. Just for my safety purpose, I'll cover this in a separate function because the 12 is applicable only for this, right? Just to ensure that is correct. And to the power R, to the power N, N must be multiplied by 12. Right? Then here you have again R. I told you each and every R, if there's any, should be divided by 12. Divide this by 12. And just in. You can see these are our monthly installment. Monthly installment. So monthly Guyana. 5 years now, monthly basis, we will have to go for 60 installment. 60 installment. Depending on it, here indicating loan, right? Balance loan. 1 minute. Yeah, that's a problem, right? We need to do some revisions to interest. Interest compute. Interest compute annual interest rate. This should be divided by 12 for monthly interest computation. Right? Then it should be copied for other. Right. Now it's correct. Okay. Formula annual 12% interest compute for the annual interest. Now you are going to repay monthly basis. So the first installment masking given. Right? You borrowed today, and after 1 month you are going to pay this amount, this installment. And then when they collect this loan installment 1 month later, so that they will charge interest for entire 5 million for 1 month. So 1 month can mean annual interest rate divided by 12. And this is accordingly total interest. This is the installment. So this is the repayment. And this is accordingly closing balance. And this is the closing balance at the end of 50th, no, at the end of 5th month. Make a settle when fully settle when 60 months old. 60 months old. Then pay 60 installment. In May, our Ghana pay formula so Ghana relative absolute club guarantee. ඉතින් මේ අතට ගමු බලන්න කොපි කරලා වැඩ කරා නම් 0 වෙන්න ඕන හරියට. Yes, it becomes 0. පැහැදිලිද? Right, this is how loan installment is paid. Loan amortization is prepared and loan is repaid and settled is clearly visible in this loan amortization schedule. And if you want to find out what is the total interest payment, you just enter all the equal and add the loan, total loan interest you have paid during the period. And the installment payment, before that, the capital repayment, this must be exactly equal to 5 million. All the equal, exactly equal to 5 million, because capital repayment means loan repayment. During the period, you can see all the loan repayments were total equal to your original initial loan. And this must be how much? 8,630,309. Because installment equals this much, this plus this. How much? 8,630,390. All the equal to 8,630,390. That's all. This is how loan repayment is prepared. Total loan interest accounting entries year 1 interest payment. Year 1 interest here. Interest cost for the year 1. For the year 1 interest cost interest cost equal interest cost year 1 එකට අදාළ මාස 12 interest cost මේ this interest cost P&L debit loan account credit interest එක loan එකට credit වෙනවා loan එක වැඩි කරනවා repayment එකෙන් අඩු වෙනවා loan තව දෙයක් වෙන්න මේ තියෙන්නේ total interest for the month year 1 එතකොට ඒක credit වෙනවා අර double end interest expense debit එහෙම නැත්නම් P&L debit loan account credit or loan balance එක loan balance එක 5 million 5 million එකට මේ interest එක අවුරුදු පුරාවටම credit වෙලා installment එක debit වෙනවා installment paid කියලා කියන්නේ මොකද sum installment එකතුව installment එකතුව මම ගන්න පුළුවන් විදිහටම තියෙනවා sum එක මේ තියෙන installment 12 එකතුව එතකොට මේ loan balance එක credit වෙනවා loan balance එකට add වෙනවා interest deduct වෙනවා මොකක්ද payments installment එක fully deduct වෙනවා හැබැයි interest එක add වෙනවා right ඒ කියන්නේ closing balance එක වෙන්නේ this plus this minus this that is exactly equal to this closing balance මේක තමයි අපේ annual accounts වලට එන ultimate impacts එක right annually accounts තියද්දි මේ open loan balance එක මේ තමයි credited interest expense එක මෙයා interest expense P&L debit මෙයා P&L debit interest loan account credit මේ loan account එක credit balance එක මෙයා P&L debit loan account credit මෙයා installment pay කරන්නේ bank credit loan account debit amen right okay මේ තමයි closing balance මෙයා තමයි this man should be this figure should be classified as current and non current ඒවා තමයි මම කියන්නේ මේක current එකේ non current එකේ portion එක ඉදි කරන්නේ ඒ කියන්නේ මෙන්න මෙයා this balance should be classified as current and non current at the reporting date how it is done then identify what are the next 12 months capital repayments මෙන්න මේ ටික එකතුව තමයි current liability ඒ කියන්නේ මේක reclassify වෙනවා නම් balance sheet එකේ statement of financial position එකේ current portion of the loan කියලා කියන්නේ ලබන අවුරුද්දේ රීපේ කරන කැපිටල් එකේ සම් එක. මෙන්න මේක තමයි කරන්ට් පෝෂන්. ඉතිරි ටික තමයි මොකද්ද non කරන්ට්. non කරන්ට්. ඉතින් කොහොමද යන්න ඕනේ මේ දෙකේ ඩිෆරන්ස් එක. මෙයාගෙන් අඩු කරන්න. මෙයා එතකොට වෙනවා ඉදිරියට කරන්න තියෙන කරන්ට් පෝෂන් එක. ඉදිරියට කරන්න තියෙන non කරන්ට් amount. හරි. ඉතින් අනෙක් පැත්තෙන් ඉතින් ඒක exactly equal 25 වෙනි අවුරුද්දේ අගට තියෙන බැලන්ස් මේ තියෙන්නේ. මේ තමයි මේක third year නම් ගෙවන්න තියෙන amount. this third year නම් ඉස්සරහට ගෙවන්න තියෙන loan balance එක තමයි මොකද්ද non current portion. මේ ඉන්නේ reporting date. මේ අපේ reporting date. මෙතන තමයි අපිට ප්‍රශ්න තියෙන්නේ. reporting date. reporting date එකේ තියෙන liability එකෙන් කොච්චරක් next year ගෙවන්නේ. මේ තියෙන next year ගෙවන ප්‍රමාණය. that total එක current හැටියට classify කරන්න. further remaining balance එක මෙතනින් difference එකමුත් එනවා. මෙතන balance එකමුත් එනවා. කීවාගේ accounting නෙවෙයි. ඔයාලා මට අදන දේවල් නෙවෙයි. right? I just wanted to explain how the amortization schedule is prepared. හරි. That's all. ඉතින් මම හිතනවා මේ විදිහට මේ දැන් අපිට පාඩ පුළුවන් දැන් මේක මම වාට උනක් කොපියක් ඇටියෙ දැන් මොන සේව් කරලා ෆයිල් සේව්ස් ඇස් දාන්නම් මේක අප්ලෝඩ් කරලා පස්සේ ඔයාලගේ අම්මගෙන් තාත්තගෙන් ගත්ත ලෝන් එක තොරතුරු දාන්න ඉන්ට්‍රස්ට් රේට් එක දාන්න පීරියඩ් එක දාන්න exactly installment එක කම්පියුට් වෙනවා ටක් එක right අපි මම දැන් කොපියක් දාලා තියෙනවා පැත්තට so Alright. So these are not needed. Right, okay. This is your loan repayment schedule. What I call the model. It's a kind of model, right? So accordingly, let's say your parents have borrowed 2.5 million, and let's say some days ago, some months ago, so you have borrowed at a rate of 12%. So this is your installment, and let's say for the period of 4 years, this must be your installment. There must not be any difference. Because bank has similar system, right? Bank computer so then make him value schedule schedule for 60 months. 48 because 4 months 48 months වලින් 0 වෙලා පස්සේ මාක් කලින් අමුතු ජලමරයක් වෙලා ඇති බලමු මෙන්න මම කිය හැටියට 48 වලින් 0 වෙන්න එපා ඊට පස්සේ තමයි මෙන්න මෙහෙම අවුලක් වෙලා තියෙන්නේ ඒ කියන්නේ මගේ මොඩල් එක මේ පොඩ්ඩක් අවුල් ඒක සෝල්ව් කරන්න හැටි මම කියන්නේ ඒක සෝල්ව් කරන්න හැටි ඔයාලගේ නොලෙජ් එකකින් කරන්නේ මොකද්ද මෙහෙම යන්න හේතුව තමයි මෙන්න මේක කන්ටිනියු වෙන නිසා මේක කන්ටිනියු නොවෙන්න අපි හදන්න ඕන. ඒ කන්ටිනියු නොවේ. මොකද අපි 60 කර හදලා තිබ්බහම සමහර විට දැන් අපි බලමු මෙහෙම 60කට හදලා තිබුණොත් දැන් මොඩල් එක හැදුවේ 60 years 60 months වලට. Right, if you go for 4 years and 48 months මොඩල් එක අවුල් යනවා. Now what about 10 years? 10 years kita 120 anu. 120 anu. 10 years itu. Number of period. Kita dana years, right? Kita dana loan period deka in terms of years. Months or in years, months in dana apa? Right? Years. Years in dana. 10 demut nan mudin balan. Dia wena ulah. Then when the 60 months nak I had little nothing balance ya kita continue in there. The model develop වෙලා නැහැ ඉවර වෙන්නේ නැහැ මේක ඉවර වෙන්න නම් අපිට සිද්ධ වෙනවා මොකක් කරන්නද you need to drag this for another 60 months making 120 months payment එතකොට මේක interesting දෙයක් වාට කරන්න පුළුවන් මේක මම ඔයාලගේ exam එක test කරන්නේ නැහැ ඔයාලා හදන්න බලන්න මේ model එක develop වෙන්න මේ තියෙන අවුරුදු ගානට match වෙන්න ඒක වල think කල්පනා කරලා බලන්න. right? ඒ කොහොමද වල පොඩි පොඩි clue එකක් දෙනවා නම් මෙතන years මෙතන loan period එක years ගානයි මේ years column එකයි link කරලා මේ මෙතනින් මෙහෙට ගන්න එක set කරන්න. දැන් උදාහරණයක් ඇටියට අපි year 1 එකේ open balance එක මෙතනින් ගන්නවා. Interest එක ගන්නවා මේ rate එක වැඩි කරලා installment එක ගන්නවා අපි computation එකෙන් capital repayment එක ගන්නවා difference between these two closing balance එක ගන්නවා මේ line එකේ result එක then we have given a formula to this අපි හැම විටම මේ balance එක it is taken to this point මේක තමයි ගැටලුවට තියෙන්නේ අපි හැම විටම මේ balance එක මෙතන ගන්න හදලා තියෙනවා ඒ නිසා අපි 60 months වලට හදලා 48 දැම්ම වුණත් මෙයා දිගටම continue වෙනවා නිසා ඔයාලා හදන්න බලන්න නිකන් ක්‍රියේටිව් පැත්තෙන් හිතන්න මෙතන 10 month 5 years දැම්මොත් model is developed only for 5 years මෙතන 6 months මේ 2 months let's say if the loan period is 5 years your model automatically develop and adjusted for 5 years and 60 months only if you go for 2 years your model is automatically developed for 2 years and 24 months only unlike this right so that can be done right by incorporating this by linking this year with this loan period and referencing this value to this point referencing to your closing balance to your open balance by considering the year digit just a clue right පුළුවන් නම් හිතලා බලන්න මෙතන අපිට ගන්න පුළුවන් right if this is greater than 1 this is 1 right or think about right then when it comes to here if this greater than this value or less than this should be this plus this all think about right and try to develop a very creative model so that whenever manager enters there's no problem with the loan amount let's say 4 million loan okay and interest rate can be adjusted and here you can incorporate you can go to developer because if you are going to make this attractive go to developer and incorporate scroll button somewhere here okay? That all we have discussed itu scroll button ada ඊට පස්සේ අපි මේ scroll button එක format control ගිහිල්ලා ගන්නවා scroll button එකේ අවුලක් තියෙනවා decimals ගන්න ඒ නිසා අපි ඒක link කරමු cell link එකේ දෙමු අපි දාමු minimum value එක loan balance එකේ minimum value එක අපි හිතමු let's say 6% වෙන්න ඕන 6 වෙන්න ඕන and the maximum value එක let's say මේ තියෙන තත්ත්වෙට කීය maximize කරලා නැවතදී අපි දන්නේ නැහැ let's say maximum the worst case scenario interest rate might go to 30% incremental range let's say is the management decision let's say incremental range 1% right 1% and the selling එක අපි output එක ගමු somewhere here output එක අපි ගමු ළඟ තරකට මෙතෙන්ද and just enter say okay and you know when it comes to up it goes up when you click on down arrow, it goes down, and this is nothing to do with here itself. It's still because we have not yet linked, and we now link our interest rate. Ask the interest rate to get it by dividing this by 100. Now you can see, you can nicely prepare your loan amortization schedule like this, and you can incorporate the same scroll button to this loan period as well. Loan period may be 1 year, 2 year, 3 year, 4 year. Then manage is very convenient, as and when the customer comes and start negotiation, he will enter the loan asked by the customer, and will put another scroll button here. And this scroll button is going to be very easy because you can directly incorporate this scroll button to your cell, intended cell. Current no need to worry. Loan minimum the value means the number of years. Let's say management, right, as what you call as policy decision. Long-term loans must be at least for 2 years. It's up to the management to decide, right? It may be 1 year or 2 years, or starting from 3 years. Now, 2-year loan management because processing loan takes lot of time. And according to management, prefer you to go for a long-term loan, because the loan more interest income to the bank. For good customers, managers like to offer loan for long-term period. Let's say management as a policy decisions, long-term loan, the minimum period should be 2 years, and maximum loan period, it depends on your remaining lifetime, right? As you young people, you can go for even 20 years, 25 years, 30 years, right? If you are an adult like your parents can't go for, if they are on the verge of retiring and they are from their workplace, then the repayment period depends a lot of factors, bank decision, the borrower's health condition, age, retirement, nature of the job, security of the job, risk of the job, a lot of things. Okay, let's say our lending period from the bank's point of view, lending period maximum 25 years, maximum 25, number of years obviously should be changed in 1 year, in 1 or 2 years, right? Incremental in 1 digit. And reference income, we can directly give it to this, because we can easily do it. There's no modifications, right? Now, if you want to make any modification, as and when a customer may discuss, you can quickly modify, right? Okay, if it is 5 years, just to adjust it for 5 years, 4 years, or if the customer asks for 2-year loan, you can make it 2 million loan, just make it 2 million, and the interest rate as a policy decision is going to be, let's say, 20%. You just quickly adjust, and the loan repayment is for 3 years, right? This installment, and end of 3 years it should be 0. 36 row K 0 in loan, 36 row K 0, 36 row K answer is 0. එතන පස්සේ ආපහු නෙගටිව් ෆිගර්ස් තියෙනවා, ඒක අපේ ෆෝමියුලා එකේ එක්ස්ටෙන්ඩ් වෙන නිසා, right? Okay, right, that's it lamai. Then I would like to move on to our slide presentations, right? So let's see how we can do this using Excel inbuilt functions. Right. So when it comes to prepare the loan repayment schedule using Excel inbuilt functions, these 3 functions are useful. These 3 functions are useful when it comes to prepare loan repayment schedule with the support of Excel inbuilt formula. So there are three formulas to be used. First one, PMT formula, PMT function. PMT function lets you to calculate your loan installment. PMT function lets you to compute your loan installment, annual or monthly loan installment. Then PPMT function. PPMT functions. So here PMT functions lets you to compute this loan installment. This loan installment that we computed using our detailed lengthy descriptive formula, right? Okay. Then PPMT. This function, PPMT functions lets you to compute principal payments. That means capital payments. Mainly principal payments tika compute karana thamai PPMT formula capital udav wenna. Using Excel inbuilt formula, you first can compute annual or monthly loan installments. Thereafter, using the second PPMT formula, you can compute your principal payment. Principal means capital repayment. Then using the third formula, IPMT, using this formula, you can compute your monthly or annual interest payment. Using this formula, you can compute interest payment. That means this one here, interest payment. එතකොට අපේ formula අපේ repayment schedule එකේ interest payment එක හොයාගන්න formula එකක් තියෙනවා IPMT. ඒ කියන්නේ මේ column එකට වැදගත් වෙන්නේ මේ column එකයි. There are three important columns. මේ columns තුනනේ මේ table එකේ වැදගත් වෙන්නේ. Out of the 5 columns, only these 3 columns are important. Why? Because these are open balance and closing balance. So open balance depends on the open amount you borrowed. That is straightforward. And closing balance is a function of open balance plus interest, right, minus installment. So accordingly, closing balance and open balance is very straightforward. They can be easily computed. The important thing, how to compute interest, installment and capital payment. Here the 3 functions lets you to compute. First function, PMT function, lets you to compute installment, that is constant, all the cases. Then second functions, PPMT, that is principal payment or loan repayment, that means these columns. Third one, IPMT, that is interest payment, that is how to compute interest, like this. Okay. We'll move on to another sheet. Make it, let's say, 18. Control 1 and format. Number. Right. Okay, we'll first put input. Then interest rate and period. in years or months you can put, right? Okay, loan amount, let's say 1 million. Interest rate, let's say at 20%. And the period in years, let's say 5 years. And the output area. And first we'll compute loan installment. Right. How to compute loan installment? Right. There are, like, we applied, right, a lengthy descriptive formula, but using Excel you can easily compute installment by using these steps, by following these steps. Here, these are the steps you need to follow. So this is the formula syntax, or the structure of the formula. Equal PMT. First you need to show the rate. Rate means the interest rate. So you can show the interest rate of the sale that shows the interest rate. NPVR means number of periods. So, right, number of payments, number of periods, NPR. PV means the present value. In our case, the loan scenario, it is the loan that you borrowed today. Future value, here there's a strange thing, future value. Future value it means after repaying the loan, throughout the loans period, if you expect to have a saving balance in your loan account, right? So expected saving balance, right, at the end of the loan repayment period. Usually, sometimes this is applicable for certain bank loans, right? But most of the cases, what we are supposed to do, you borrow a loan, and at the end of the repayment period, your loan balance should be zero, and you are not supposed to have any saving balance. They can suppose you borrow 1 million and you are going to repay it in 5 years, right? Usually, right, in our previous example, at the end of the year 5, if you keep continuously and properly, appropriately, you keep paying your interest and installment, what will happen? End of the loan period, your loan will be fully settled, loan balance will become zero. That's it. You have settled your loans, but you are not going to receive any cash balance from the bank, because you just repaid your loan and loan was settled. You are not going, you are debt free, you are free from debts, and you just have the happiness, but you don't have any savings. But if you wish, I borrow 5 million, I will settle in 5 years. By the end of the year 5, I should have settled my loan in full. In addition, I should receive 500,000 cash balance now. Unexpected future cash savings you should give here. In our previous example, we didn't have that kind of scenario, right? Then type mean whether your loan repayment is made at the beginning or at the end. That means whether your loan repayment is an ordinary cash flow or due cash flow. At the beginning, at the beginning, I told you, I explained you there are different types of cash flows: ordinary, annuity, and due annuity. Usually, most of the cash flows are ordinary. That means cash flows are occurred at the end of the period, right? Especially loan repayment related cash flows, loan repayments or the installment payments expect to occur at the end of each month or each quarter or each year. Type ordinary cash flows usually, right? Rate can interest rate, no problem. NPR can number of periods, number of 5, that means 5 years, 10 years, or 20 years, or 1 month, 2 months, 3 months, or whatever. PV means principal, principal value or present value, ideally principal value. Then future value, I explained future value means the expected cash savings, so cash balance you are supposed to generate end of the loan settlement. Type means whether the loan repayment occurs at the beginning or at the end. Lamai, keep in mind, if you are not going to have any cash balance, that means you just want to settle the loans and no balance is required, no cash fund is to be generated. Now you just leave 0 for future value. Future value can a dialog box is 0 dana, or just you ignore that. Then it assumes you are not going to generate any cash savings. You just want to settle the loan end of the loan period. Then type 0 type you need to give a value. If you assign 0, it means loan repayment is ordinary cash flow. That means loan is repaid at the end of the period. If you put 1, it assumes you are repaying the loan at the beginning. Usually my loans are settled, or loan installment, lease installments usually settle paid at the end of the period. The lease initial deposit down payment loan repayment end of the period. Beginning right? No problem. But usually it depends on the loan agreement. Usually loan installments are paid at the end. එතකොට මේ type කියන dialog cell එකට ඔයාලා දෙන්න ඕනේ 0 most of the cases. Why? 0 indicates loan repaid at the end of the period. Or you just ignore කරා සලකන්නේ 0 හැටියට, ඒ කියන්නේ loan repaid at the end. ඇයි එහෙම හිතන්න හේතුව ළමයි most of the cash flows are ordinary ඒවා තමයි end of the year වෙන්නේ. now ordinary ඒවාට අමුතුවෙන් කැටයම් දාන්න අවශ්‍ය වෙන්නේ නැහැ. මුකුත් නොකරවොත් එයා සලකන්නේ ordinary, that means 0 දැම්මත් ignore කරත් assume cash flow occurs at the end. But if you want to specifically tell the formula no loan repayments is made at the beginning of each period, now you must type 1. You must enter 1 for this other type, right? Type 1 දාන්න ඕන end of the period now. Sorry, beginning of the period now. Most of the cash flows occurs at the end, so just leave it blank or put 0. Future value sambandhimu, most of the cases no future value. No future value. You just borrow a loan and want to settle and make it 0 at the end of the period, and you are not supposed to generate any cash savings. Then future value, just leave it blank. Right. Okay, we will now consider how to do this accordingly, how to compute payment. Right, let's assume our loan installment, right? How to compute loan installment, right? We can say P equal PMT. Right, here all the variables are there: rate, NPR, PV, FV, type. See, so these are what we have explained here: PMT, rate, NPR, PV, FV, type, all are there, right? So I will extend it to write clear dialog box. Rate, you just show rate is this and make it constant. Then NPR, number of payments, number of periods. Here I'll put this and make it constant. Present value, or the principal value, means our loan amount, this one. Future value, I don't need to generate any cash balance. I just want to borrow the loan and settle and make it 0 end of the loan period. No, I don't need to have any loan saving balance. Okay. Then type just leave it. If you just leave it blank or put 0, assume loan is repaid at the end of the period. That's it. Right. Then say okay. So here the installment value comes as a negative figure. It's okay, right? So this is the loan installment subject to 20% interest rate and 5% 5-year period, 20% interest, 1 million. This is the loan installment. 334,380. Let's go and check it from our model, our lengthy model, descriptive model. We'll make it 1 million and 20% and number of years 4. Number of years 4. Here the rate. Okay. Monthly installment, right? Monthly installment annual annual installment now. You have to a lot of things. Divide remove the divided figures and remove the multiplied figures and remove these divided figures. Just enter. You can see it is 386,289. There's a slight difference, right? There's a slight difference here. Here for 5 years. 5 years, right? So this should be for 5 years. Yeah, this 334,338. Sorry, 334,380. Using our inbuilt function, 334,380. Exactly correct. So accordingly, what do you think about this inbuilt formula? Yes, it is very, very convenient rather than typing that lengthy descriptive formula. Right? So accordingly, this is very convenient for you to prepare your loan repayment schedule. You can easily compute to install. Otherwise, what I have to do? Divide the loan amount by 1 minus 1 plus 1 minus 1 over 1 plus r to the power n divided by r. That is story. Or you can divide loan amount by percent interest factor annuity. Right? But this seems convenient, right? So now we compute loan installment. We'll now start preparing loan repayment schedule. So we put the headings. Let's say here and the open balance. Interest, installment, and the principal payment. Let's say principal payment. Finally, closing balance. Closing balance. Year 1, year 2. Can go for just for 5 years like this. Open loan balance will equal to this one and make it constant. Like interest of even computer. Like okay, installment we compute. Installment is this much. It's this much. Make it constant. Enter. So this is installment for all the period. Constant installment is same constant. Like pick up right, then interest, principal payment, that is PPMT. You have a look at that syntax. PPMT, that is principal payment function. Principal payment function is syntax. Again, rate kilo that is interest rate. Here PER that is the period. That means the period through which you repay the loan. It is range. It is a range, right? Here NPR means we already know that is the number of payments for the whole loan period. Number of payments. PER means I'll explain it. The period through which you repay the interest. This is principal value. Principal value, that means your amount you borrow. Future value if you expect to generate a cash savings, type whether you are going to repay it at the beginning or end. Most of the cases, you can leave it blank for future value and type you can leave it blank. That means no cash balance is going to be generated, no saving balance is going to be generated, and payment is made at the end of the period. Then we'll see how to do this. Equal PPMT. You can see rate, TER, NPR, PV, all these figures. So we'll extend this to function like this. Rate is the interest rate, and we'll make it constant. PER means our period. It will change because it will change over the period. So PER means this one. That means period 1. It may be period 1, it may be period 2, it may be period 3, and it is very important make it relative, because you know the capital repayment will vary according to period. Capital repayment will vary according to the period. So PR means our period, it is applicable to this whole range, but you just show it like this and make it relative. Don't make it constant. This is NPR means number of period. It is here 5 and make it constant, fixed. Principal value is our loan and make it constant because we are going to drag it down. Future value, we don't need any cash balance. You just leave it blank. And type, you just leave it blanks. Why you let it blank? Because blank or 0 implies you are repaying the loan, you are making the installment payment at the end of each period. That's it. Say okay. So this is the year 1 repayment. Year 1 is the year 1. Principal repayment. You can installment එක මෙච්චරක් ගෙවුවට ඒකේ principal payment එක මෙච්චරක් තියෙනවා. එකක් තුනක් පාත ඇදලා බලන්න පුළුවන් මේ ආකාරය. Right? Then අපිට තව එකයි අවශ්‍ය interest computation. ඒකට තියෙනවා මෙම formula. Interest payment. Interest payment එකේ formula එක තමයි illustration is like this. Interest payment function. Again, IMT means interest payment. Here, syntax rate, interest rate. PER means, because PER means the corresponding period. Corresponding period for the interest computation. Because you know, interest payments change period to period. Period 1 interest differs from period 2 interest. Period 1 interest is very high because more loan is outstanding at the beginning. Second period, third period, or the right period as and when you keep paying the loan, your interest payments is getting reduced because you are keep paying your loan outstanding balance. Outstanding balance you have to settle interest payment. So PR means corresponding period. NPR means number of repayment periods. PV means present value. FP type we already explained. So accordingly we will compute interest now. Interest payment equals IPMT, interest payment. Rate, PR, corresponding period, number of payments, present value, and FP and type we can do it blank. Right? We'll extend it like this. Rate is interest rate and we'll make it absolute. And the PER means the period, corresponding period. So we'll first compute the interest for the year 1 and make it relative because we are going to drag that formula for the other periods. NP means PR means number of payments, number of period, and make it constant. Principal value is the loan you borrowed and make it constant and constant for all the cases. Future value, we don't need to generate any cash saving balance. Type, we are going to repay at the end of the period, so you can just leave them blank and say okay. So this is the interest for the year 1. The පැහැදිලි ළමයි මොකද්ද? 1 million වලට 20% ගානේ අවුරුද්දක interest මෙතන තියෙනවා. 4 යද්දී interest අඩු වෙනවා. interest අඩු හරි එහෙනම් closing balance, how do you compute closing balance? Closing balance සමානයි closing balance equal open loan balance එක plus මෙතන minus නිසා plus දාන්නේ principal payment. That's it. Open balance එකෙන් principal payment අඩු කරලා පස්සේ තමයි closing balance. So this closing balance must be equal to open balance. Now you can copy this to other parts, rest of the period, and you can just drag this to down, then it will become 0. That's it. So according to this is convenient. Yeah, you don't need to type descriptive formulas like 1 minus 1 over 1 plus r to the power n, or you don't need to refer it to finance table or present value interest fact annuity. So you can see it looks good. It looks good, right? It's convenient, comfortable. Now, what if you want? So this is if the loan is repaid annual basis. Lamai, if you want to repay the loan monthly basis, if you want to repay the loan monthly basis, then let's go to this one, PMT formula, and extend. If you want to make it monthly basis, make sure rate should be divided by 12. Number of payments years number of payments years number of payments years multiplied by 12. Principal amount, let it say okay. Many installment monthly gyana. Installment monthly gyana. Then interest computation. Again, interest computation ke formula එක තියෙන මෙන්න මෙතන. ඒක අපි adjust කරමු ගිහිල්ලා monthly යනවා නම් again rate should be divided by 12. PR කියන corresponding year එක 1 here. Then the NPR, number of periods, should be multiplied by 12 because 5 years and 60 months. Present value leave it constant like this. Okay. Then principal payment also, original formula is for one, right? Annual installment basis, we'll adjust it. Rate, again, rate is annual interest rate. It should be divided by 12 for monthly payments. PR, same one. Number of payments, 5 means, here 5 means number of years in 5, but if it's monthly basis, it should be 5 times 12. And present value of principal amount remain constant, we'll leave it like that, same. Okay, this is what happens if it's monthly basis, and you can go for 60. We need to adjust like this. We need to adjust like this. Okay, this is the situation, and you can simply drag this for 60 months and check whether it will get 0. It seems it's correct because figures are reliable. Let's check whether it will become 0 end of year 60. Yes, it's 0. According to if you want to prepare loan amortization schedule, it is very, very convenient to go ahead with this Excel inbuilt formula. Just for clarification, final summarization purpose, as a summary, I would like to say this is taken using IPMT form function, right? This is taken from PMT function. This column is taken from PPMT function. That's all. And if it's a monthly basis, make sure each and every R should be divided by 12, and NPR or number of periods should be multiplied by 12. R should be divided by 12 NPER in your form that should be multiplied by 12. That's it. Okay, that's about loan amortization schedule. Now I will upload several videos, lecture recordings for the two sessions that we missed due to unavoidable circumstances. We could not conduct two sessions last Friday and the previous one. Right, 2 weeks ago, we again we could not conduct our session. Right, so accordingly, I will upload those two recordings available them on the YouTube. Right, so okay. Thank you very much. We'll wind up the session.